But what's up? What's up? What is going on, everybody? We are live today. Obviously, it is Tuesday night here on another Rockstar session. I'm excited. So tonight, we're going to be diving into a few things, breaking down a few things for you guys on the trading side, of course. As you guys know, on Tuesday nights, we do focus more on the charts. We go a little bit more into strategies, the different things that you guys can look at while you are marking up your charts, whether that be candlestick patterns, whether that be chart patterns, whether that be just understanding basic market structure, support, resistance, higher highs, higher lows. We break that down on Tuesday night for you guys, again, to make your trading better on a day-to-day, right? So tonight we're going to be getting a little bit into that. I'm going to be teaching you guys one of my favorite, like absolute favorite chart patterns. It's a chart pattern that can literally be used in any strategy because it's so simple. And it's probably one of the easiest chart patterns that you guys can learn. It could be implemented inside of a strategy, and it could also be used as a standalone strategy. But all in all, I'm going to be teaching you guys how to trade it. I'm going to teach you what it is that we look for, how to get those good entries on it. As you're trading, if you see these signals in the market, it can give you a better direction of where the market is going to be going next. So the pattern that we're going to be looking at and diving a little bit more into today is going to be a pattern that's essentially a variation of a double top pattern, as you guys can probably see by the title, but it's not necessarily the double top. The strategy that we're going to be focused on today is going to be the Teacup strategy, okay? And this is something that I've learned a couple years back. I use it as a standalone. It's made me a ton of money. I love it. I know a lot of people that use it that's made a lot of money with it. Again, the reason why I don't focus on it too much now is because I find that it just works so much cleaner on the higher time frames, the 1 hour, the 4 hour, and especially the daily, if you guys trade up to that point. But it can also be used on the lower time frames as well. You would just have to go in, back test, and see what works for you, okay? I know the parameters and how to trade it on the higher time frames. So let's jump into it real quick. So the idea of the Teacup strategy, and I'll break down the concept of it, and then we'll go into how it actually works, is essentially it is a double top formation where we're looking for the markets to pretty much hit a high level. So if we're talking about a double top formation, you guys know the double tops typically have to be formed at the top of the market. We don't want to go ahead and enter double tops in the middle of the market. We would want to enter them for the best setup at the top of the market. So you'll have a higher high, all right, level, as we see right here, for example. And the idea is for the markets to come back, do whatever it does. It doesn't matter how long it takes, but to come back, retest that level, same level for a double top, right? And then we are getting in for the sell of that. Now, the cool part about this strategy is that this is 100% a set it and forget it strategy. So why is it called the Teacup strategy? I'll give you guys more of a visual right here. All right. So you're going to want to use your arc for this. You're going to start at that first touch point, all right, of the higher high. Drag it over to obviously where you're essentially going to be entering at, and you're going to pull it down to the full move of the bottom of the market, right? As you guys can see, it does look like a cup, all right? And we are going to be entering for the sell, which would essentially be our Teacup handle. Okay, so you can enjoy a little. I personally don't like tea, so if it was up to me, it would be a coffee cup. All right, but that's essentially how it is. Okay, does that make sense, everybody here? All right, so now we're going to dive into actually trading it. Okay, now that I showed you guys my amazing chartful art skills. All right, we're always looking for key levels in the market. Now, when you're looking for key levels in the market, the reason why I like this setup a lot better for the higher time frames is because this setup is very much dependent on support and resistance depending on where your entry is at. Okay, so we're looking for those levels where market just cannot seem to break, all right, or penetrate. Okay, the higher you go up in time frame, the more data that you have to work off of, and these tend to be stronger levels in the market, stronger than maybe like a 5 minute or even a 15 minute. 15 minute is good, but again, 1 hour, 4 hour daily support and resistance levels are much stronger than a 1 minute, 5 minute, so on and so forth. Okay, so I trade this. I would trade this on a 1 hour, 4 hour. I don't really have the patience for a daily, to be honest with you. I don't think it's necessary. I think the 1 hour does great. The 4 hour does even better. But it's not what we're typically looking on the 1 hour, okay? So let's say we're looking at this example right here. All right? Let's say we're looking at this example right here. Markets come down. All right? Boom, boom, boom. Markets come up. So now, I'm not going to do the market replay just for the sake of saving time here. I'm just going to show you guys how it looks. All right? Oh, the session replay. So we got our higher high right here. Once we get that higher high, okay, what we're looking for, all right, there's 3 steps that you essentially want to look for. All right? So the first thing that we're looking for once we get the higher high, so step 1 is higher high, right? Step 2 is what we want to see. We want to see a 3 candle formation, okay? The 3 candles that we typically want to see. And some people break the rules. Again, I just stick to the rules. I keep it nice and simple. What I'm looking for is a 3 candle formation. I'm looking for a bull candle. So market's going up, followed by reversal. So we got a bear candle, okay? And then a lower low candle. All right? So we're looking for a bull, a bear, and then a lower low, which is essentially just another bear, lower than the previous bear. All right? So, boom. So those are the 3, that's the 3 candle formation that we're looking for. So step number 1 is we want to see a higher high. So we got that right here. Okay? Step number 2 is we want to see these 3 candles following each other. All right? Super simple strategy I'm teaching you guys here. So if we're looking at this area, this spot right here, okay, did we get that? Did we get that here? Bull, yes. Bear, yes. But we didn't get the lower low. What did we get instead? We got obviously another bullish candle, right? So I wouldn't have entered here. This is not where I'm looking to enter. Now, right next to that, we do get it. We got the bull, the bear, and then the lower low. Now, I typically, this isn't the best example to show, obviously for this strategy, especially starting off the session, right? But I'm going to show you guys anyway, because there isn't really a significant amount of, pips from here to here. All right, it's about 7 pip difference, right? So essentially, we are still at the top of the market. So we get our bull, bear, lower low. We got our 3 candle formation. What you're then going to do is we're going to take our horizontal line. All right, or you can use this one, right? The horizontal ray. You're going to start from the body and go straight across. All right. Start from the body and go straight across. In this example, I would have started from the wicks just because this would have or should have been the initial entry. But obviously, we're getting in a little bit later. All right, so that we can get that 3 candlestick formation. So we'll do the wicks on this example. Top of the wicks, which is half of the body right here. All right, bull, bear, lower, low. All right, and what we want to see is we want to see the markets drop. All right, create that cup, okay, and make its way back up to that horizontal candle. Okay, so now market comes back up. So once we put our horizontal line there, what we're going to do is we're going to set a buy, okay, a sell limit. Sorry, I said buy limit. We're going to set a sell limit in the markets. Okay, what a sell limit is essentially, all right, I'll pull this up for you guys to see. Okay, there's 4 different order types when you guys are trading, all right, especially leverage in the market. Now, obviously, if you're trading binaries, you're going to need to be on the charts because we can't do pending orders. If you're trading leverage, we're going to do a pending order with this. So again, you can kind of set it, forget it, you'll get that entry. Maybe you'll put an alert on your chart so that when it does retest, you get the alert on your phone and you know to take a look at it, right? But either way, we're going to set what's called a sell limit. What a sell limit is the order is placed above the price and the price then goes down. All right? So how would that look? Okay? How would that look? So as the market is dropping right here, we're going to place an order over here. Well, it doesn't matter where. It's just at this price, right? So we're going to place an order at this price, which obviously you can find at the end of your horizontal line or horizontal ray. Price is over there, right? And we're going to tell it, what sell limit does is it's going to tell the markets to enter me the next time the markets hit this price and comes down. Okay? So the next time, it doesn't matter. It could have been right here. It could have been right here. As long as the markets come back up to this price, hits it, and drops back down. That is what a sell limit is. Okay? So again, these are the 4 order types. We don't have to go over all 4 here on this session because it's not about all 4. Buy limits is if you're looking for buys, which will be on the bottom side, which is what I was telling you guys before, which is the double bottom. You'll put a buy limit instead of a sell limit. We're going to focus on the double tops today, and they're going to do sell limits. Okay? So step 1, we need that higher high. We need markets to be at a high. Step 2, we got the bull, the bear, and the lower low candle. Step 3 is going to be place sell limit. All right. So we're going to place our sell limit at the horizontal line. We can't forget step number 4. Set your stop loss. All right. So because this is a pending order, 1000%, you want to make sure you do not set up any pending orders. That means the market is going to enter you in that trade, whether you are on the charts or not. You do not want to go ahead and enter any trade without setting that stop loss. Okay, so make sure you guys have that set up. All right. So one more time, I'm going to put the sell limit on there so you guys can see that. We're looking for the markets to come down. All right. We place the sell limit for it to come back up to the price and bounce off the price and drop down. Once it drops back down under the price, the markets will automatically enter us into that trade. Does that make sense to everybody here? Okay, cool. So on the 1 hour, what we're typically going to do is, obviously, we're going to set some short position, right? We're going to set a stop loss between 25 and 30 pips. I personally do 25. If you guys want to, give the markets a little bit more room, especially if you're on like the 4-hour time frame or a higher time frame, then you might want to do 30. All right. Well, we're doing 25 pips here. Okay. So what's going to happen is that the market is going to do its thing. It's going to come all the way back up. And once it hits this price again, where our horizontal line is at, remember, this is where our sell limit is. Okay. It's going to enter us into the trade once we drop back under that sell limit. Okay, so once we drop back under the sell limit, it'll automatically enter us into that trade. All right. The idea is that obviously we want to ride this down as much as possible. What I would do if I were you guys is I would right click on that horizontal ray and I would set up an alert. Okay, so if you're going to be setting pending orders, I would definitely advise to set up alerts so that you guys know. So that you guys know when the markets are crossing, or, you could put crossing down, okay? You could put crossing up, or you could just put crossing in general. All right? I'll just put crossing in general. And what that does is that when the market comes up and it begins to cross that horizontal ray, obviously the pending order is going to put us into the trade, but the alert is going to notify us. Which is why I say it's essentially set it and forget it. The alert is going to notify us and let us know that the markets are now crossing up above our horizontal ray. Okay? So boom. All right? So now we got our teacup formation and we are in for the sell. The beautiful part about this is that typically the markets are going to move, man. They're going to move. You're going to notice on almost all the setups that we get here, we don't really get much drawdown. This is the one example where we got some drawdown. The first example where we got some drawdown and we had about 15 pips, right? 15 pip drawdown, but it didn't stop us out. And you could have scalped the 1-to-1. Right here would have been a 1-to-2. So let me actually put it. All right. So you'd have been here for, all right. Where's the 1-to-2? 1-to-2 is right here. And then you could have rolled this all the way down to here and got a clean 1 to 4, almost a 1 to 5 risk to reward on this position. Almost a 1 to 5. And how many candles was that? All right. So yeah, this was essentially a good trade, right? About 3 days. You would have been there, 1 to 5. So again, this is more for longer term. But isn't that beautiful? Isn't that beautiful? Now watch this though. This is where this strategy gets super lit, right? This is where it gets super lit. So as you guys know, we got the double top formation, but it might come back, and like Wanda said in the chat, it might retest again. Right? It might retest again. Right? So what I would do is hey, you know what? This is where we were at. All right, on the previous trade. What I want to see is I want to see it do it again. So here's what I'll do. I'll find the top. I do bodies. Remember, I do bodies. Whenever we're at the top of the market, I'll do the bodies. Okay. Pretty big candles as well. The more you guys trade it, the better you get at it. But with big candles like this, I would have been about right here is where I would have put it, right? But we'll go ahead. We'll do another example. This is literally right after that. So we got a nice clean setup here. We're going to do it again. All right. We'll do it again. So we got our bullish candle here, our bearish candle here, and our low candle here, right? Boom. We set our pending order right here. So at this price is where we'll go ahead and set our sell limit. All right. And then we'll set our stop loss. Okay. Why can we do this early? We can do this early because we already know that we will not even be entering this trade unless the market comes back up to this price. Okay. So unless the market comes back up to the price, we're not even entering this trade. So it doesn't even matter. All right. So as you guys can see here with this position here, we had almost no drawdown whatsoever. We had about 0 drawdown. You guys see that? No drawdown. And we went straight into profit. Right? So 1 to 1, if you guys are trading just a regular 1 to 1, that would have been caught. All right. Right away. Literally 3 candles later, you would have got your 1 to 1. All right. If we're looking for a 1 to 2 risk to reward, I personally like trading 1 to 2s and above. Okay. You would have got it right here. Couple candles away. Not too bad. And if you would have rode this move down for its entirety, especially because, again, we still have 0 drawdown here. So if you would have rode this move down to its entirety, you could have caught a fire almost 1 to 5 risk to reward. Almost 1 to 5 on that. Fire or what? Let's look at some more examples. Look at some more examples. All right, we're not really seeing anything here. Market's never made its way back up here, so we're not going to look at that example. Okay, we can use this. All right, this was the highs over here. Obviously, this doesn't count because this didn't happen yet, right? So this didn't happen yet. So we can look at this example right here. And even here, we got another back-to-back example, right? Yeah, we got back-to-back example here too. So here, market comes to a high, right? Let me get my, go back and get my text real quick. Boom. So walk me through these confirmations. Actually, let's do some session replays here. All right. So session replay. Let's get it. All right. Market's shooting up, as we can see. Okay, cool. So we got our 3 candle formation right here. You guys see it? All right. So we got the bull, bear, and the lower low candle, or essentially just another bear. Just keep it simple for y'all. Okay. We also have, right, some exhaustion right here. We went over this last week when we spoke about candlesticks, right? Candlestick reversals. So what would this be? Who knows? What reversal was that? All right, drop it in the chat if you guys know what candle reversal that is, right? So that's another confluence or another confirmation for us that the markets are going to be dropping. I say, okay, cool. Let me go ahead and put that bad boy there. All right. Boom, boom. That's a shooting star candle, by the way. All right, so we got a shooting star. And all we're simply going to do is, again, we're going to set our stop loss. I don't know where it's going to be in terms of where the market's going to come back to that price. But what we do know is that if it does, we set our sell limit already. So it's going to be entering us into that trade. So I'll just set my stop loss here. All right. Boom. And we'll wait for the markets to come back. So here it actually happened pretty quick, right? So this is like an espresso shot cup. All right, you guys ever had those espresso shot cups? Little tiny little espresso shots. All right. So we got one right here. Okay. So we can move this over here now. Again, we already set this up. When we placed the trade and we placed the sell limit, we already put our stop loss in place. So when we placed the initial sell limit, I'm sorry, I keep thinking sell stop. When we placed the sell limit, we already put our stop loss here, right? I'm just giving you guys visuals with the actual tool so you guys can see it with the tool. Okay, so boom, as you guys can see here, markets continue to drop. We already hit our 1 to 2. So it's already, 25 pips stops. This is a 50 pip take profit right here. So we already hit a 1 to 2 risk to reward. And if you guys would have trailed your stops, or maybe you just held it a little bit longer, okay, you could have been in and caught, all right, a nice, oh my God, again, almost a 1 to 5, right? So this dropped about 120 pips. So almost a 1 to 5 again. So you guys are starting to see like that commonality, especially on the 1 hour. Just with the 3 examples that I gave you guys, all of them reached at least a 1 to 4, right? So even if you traded a 1 to 3, a solid 1 to 2, you probably always hit that take profit on 1 to 2, okay? Obviously, you got to get better at the strategy. So identifying it, having the patience, doing that kind of stuff, okay? But that's a 1 to 2, super solid. 1 to 3 is pretty good as well. And as you guys see, all 3 examples so far have hit that 1 to 4. I think only one of them made it to 1 to 5, but they all came really close to a 1 to 5, right? So boom. All right, cool. So now we know this is a high point in the markets. What am I going to do? Well, I'm going to do it again. I'm going to do it again, right? Why not? It's a sell limit, right? So if the markets never come back up to it, so all we got to do is cancel the limit. But if it does, we're in the trade, right? So I'll do it again. Once we enter and we're good, all right, and we go ahead, we hit our take profit. Let's go ahead and stack another order on that bad boy, right? So we'll go ahead, we'll place it. Boom, boom, boom. Why? Because we got our bull, bear, and lower low candle here. All right, we place our limit at the horizontal line. We can go ahead, we'll set our stop loss. Okay, set the stops. 250, which is 25 pips. And again, I'm just using a 25 pip example. If you guys want, you can use a 30 pip example. I wouldn't do less than 25 pips. I like that 25 pip mark. Okay, 30 is a little pushing it, but it still works. It still works. Okay, so boom. So now we'll just wait for the market to come back up. If it does, I actually don't remember on this example. Oh, there we go. Boom. Wicked it. Wicked it. You guys see that? So we officially entered the trade right here with our sell limit. Automatic entry. We didn't have to do anything. but set it and let it do what it does. Beautiful standalone strategy once again. All right. I use it for additional confluence when I'm trading, but it works just by itself. So we'll go ahead. We'll set up that 1 to 2 real quick. All right. So this will be the 1 to 2 area. Let's see if we drop back down. Boom. Hit our 1 to 2. Over. Let's see how far we can take it. Sheesh. All right. And we have officially broke that 1 to 5. Boom. Another 1 to 5, 1 to 4 plus trade before it comes back up. It's still dropping, actually. Still dropping. I definitely would have been out by now, though. I don't think I even would have been in past this point. I would have to this pullback. Once we broke this line, which is right here, technically right here, I would have been out of the trade already. So I personally would have caught about a 1 to 4 yet again. All right. Fire or what? 4 back-to-back examples. What are you guys thinking? All right. I'm going to show you guys 2 more things with this strategy. I kind of just gave you one, but I'll show you guys 2 more things. So the first one being is going to be our all-time favorite. All right. This is something that we know we use all the time. All right. Let's go ahead and end the replay. All right. We'll look back at all 4 examples that we got here. So if you want to add some confluence to this position, all right, and make it an even stronger position or a stronger trade, if you're using this as a standalone, obviously, strategy, or if you're using it as, again, additional confluence for the strategy that you already trade. Maybe you trade double tops, maybe you trade head and shoulders, maybe you trade trends or breakouts, whatever it is. Being able to identify this teacup formation could help you out on all levels. Now, if you're looking for additional confluence, then like I said before, guys, what you're going to want to do is, I don't do the fully set it and forget it. It is super convenient to set and forget, obviously, our positions. But I always like to know what's going on with my trade, so I can make that educated decision on whether or not I want to continue in or, maybe pull out, right? So what I like to do is obviously I'll set my price alert. So again, how you do that is you'll just right click on trading view, either your, whether using the ray or, horizontal line, you right click it and you're going to add an alert. Once you add that alert, obviously it's going to notify you. So you got to set up notifications. If you have the app on your phone, or even if you have your emails linked, or whatever the case may be, or even if you have it on your computer, you can get notified in all 3 locations. So I get notified on my email and on the app, push notifications on the app, as well as on the computer, just to make sure when that alert goes off, I hear it and I know what's going on, right? So I got all 3 set up. So once you get the alert, what you're going to want to do is just come to your chart, and you're going to check your chart out, and you want to make sure that our favorite indicator is doing what it does. Who knows, guys? What is my favorite indicator to use? Okay. My favorite indicator to use. The stochastics RSI, right? So whether you're using a regular stochastics, a regular RSI, all these stochastics RSI, this strategy works best when you're trading with momentum. All right. So we want to see momentum pushing in our direction. So what does that look like for us? That looks like us getting a confluence or an additional confirmation of our famous stochastic cross. Boom. So you guys see here, right at that the point in which the markets got us to enter, we got the stochastic cross and the markets continue to fall. We'll look at this one here. I don't know if we got it. We'll see right now. Boom. Yep. Beautiful again. Stochastics cross. So if you guys aren't familiar with the stochastic cross, it's when your stochastics, your RSI or your stochastic RSI becomes overbought in this example, and you want to see those lines cross down. Okay. Boom. Let's go back over here. Same thing so I can show you guys. You want to see those lines cross down. All right. So they're crossing in the direction that you're looking to trade. That is our stochastic cross. All right. You guys seeing that? Beautiful setups. So we got our stochastics crossing down on both of these examples. Again, beautiful trades. This one, what? We got a 1 to boom. I mean, that's a 1 to 4.5. I mean, technically, you could have rolled this down to over almost a 1 to 6. All right, this is a solid 1 to almost 1 to 5. That's a 4.9. All right, let's look at the ones we were just looking at. If I can find them. There they are. Let's see if we got our stochastics cross on here. So again, just additional confluence. Yes, we do. We got our stochastics cross. You guys see that? So additional confluence that we're looking at here. And right after we after we go through this, I'm going to show you guys how I trail my stops and when I would pull out of this trade manually if I don't have a set take profit, which typically I don't trade with a set take profit. I'm usually monitoring my trades. I have a 1 to 2 risk to reward in mind, but if I can get a little bit more than that, that's what I'm pushing for. I'll take out majority of my profit and let the rest trail out. All right, but we got the stochastics cross there. All right, let's see if we got it here. All right, here was a little bit trickier. We didn't really get it here. Oh, yeah, we did actually. We got it on the 50% mark. All right, so you guys know I'm a fan of that as well. That's the halfway mark of the stochastics, which works because that just means the markets are going down. So when you got your indicator also creating lower highs, so we got higher, lower, right? Lower. That indicates the market is doing what? Markets are going down. Right? Boom. So we did get that there. All right. It wasn't overbought, but that's kind of expected because we're moving in a downtrend right now. So it probably won't always be overbought in the downtrend. All right. But as long as we got that retracement, that's the 50%-ish, around the 50% area. Remember, nothing is fully certain in the market, so it doesn't have to be exactly 50. All right, I know I'm trying to get it at the line there. Whatever. That's good right there. You guys get what I'm saying, right? You'll see multiple reactions in these areas as well. You see right here. You see right here. You see multiple reactions in these areas as well. So that midpoint is pretty good as well. Obviously, the strongest ones are always going to be the tops and the bottoms, but we can get something off those mids too. Again, this is just additional confluence, though. This isn't a part of the strategy. This is just something that I like to use. I use it in all of the strategies that I trade or that I've ever traded. All right, because I don't trade multiple strategies at a time. But super lit. All right. So if you're using the regular stochastics, actually, I don't know. Let me pull up this indicator and I'll show you guys what I use. Oh, yeah. So the regular stochastics is good. It's already going to have it separated. I'll put 533 on here so you guys can see that. 533. All right. You're getting the same crosses at 533. Regular stochastics is probably a little bit cleaner too. All right, because it's more focused on momentum. But I use the stochastics RSI. I like using stochastic RSI. And the settings that I have on that is 3355. If you're on TradingView, you can use stochastic RSI. And I got 3355 on that. Okay, so beautiful setup. Now that we're in this trade, let's talk about potential exit points, okay? Because those are going to be key as well. All right, so obviously we would love to always catch those 1 to 5s. Again, if you want to, you can shoot for the full 1 to 5 if that's what you guys want to do. I mean, I wouldn't do 1 to 5 to be honest with you. I'd probably stick with a 1 to 3 to the 1 to 4 to be safe. But if you want to trail it as much as you can, let's talk about entry and how that would look. So what I like to do is, and I do this with anything that I trade, even right now, I trade primarily trend lines, super simple strategy. But this is what I'll do. So I'll take it from the high and I'll go to the next one. So again, just as I told you guys before, when we're trading trends, we don't want to cut through any candles. So wherever I can get that reaction point and the pullback without cutting through candles, that's going to be my point A and my point B. Okay. So once we got this retracement or this pullback here, okay, I don't want it to pull back higher than this, right? All right, now we got another pullback, as you guys can see here. So what I'm going to do is I'm going to put a trend line within my trend line. Okay, and we're going to do that. Okay, so what does that mean? That means as obviously we got this pullback here, the market's continued down. Okay, as long as the market doesn't cross up above my trend line from this point to whenever, I'm still in this position. But as soon as it crosses up, that's where essentially I'm hopping out of the trade. Okay, because that means we're probably experiencing a reversal in, a shift in market direction. And if I'm trailing my stops, I'd rather it not just come all the way back up to wherever my stops is being trailed at. If I could pull out a little bit, before that, that'd be great. So, we would have, instead of catching this 1 to, almost 5, I would have been stopped out right about here. And that would have been a 1 to 3.8, right? So let's just say a solid 1 to 3.5. Let's just say that. All right, which is still fire. I'll show you guys on the next example how that would have looked. All right, so obviously we entered the trade. We hit our, where's our 1 to 2? Let's look at where the 1 to 2 is at, because that's what I'll base it off of. Once I get to 1 to 2, that's when I'm typically trailing. I want at least a 1 to 2 risk to reward. Okay, so 1 to 2 happened right over here. Okay, cool. So we got a few pullbacks already. We'll start at the top. Okay, I'm going to take this. I don't want to cross through any actual bodies, so we'll go ahead and we will do that. This might be better. No, this is good. Boom. All right. So as long as we're not crossing above here, we are still moving down. That's my viewpoint. So this one is safe. I would have trailed this all the way down as much as possible. Okay, I would have trailed it all the way down as much as possible until we got the next pullback. Obviously, we got the next pullback. Comes up here. Okay. What I then do is trend line within the trend within the trend. I take my previous point B, make it point A, come down, and we're going to put that where that pullback was. All right. And as long as the market does not pull back past that, we are good. So we see that the markets did break after this drop. It did come back up. Oops. And it broke. I'll just do this. It broke right here. So this is where we would have been out of the trade. We would have hopped out right here. These are manual, by the way. These aren't going to be like, you can't automatically put this in because you don't know where those pullbacks are going to be. I mean, you can take a guess, right? You can look at it and be like, all right, it's about 3, but you don't really know. So you would have to be watching the charts for this to work. But here we still would have got it again, more than a 1 to 3. This is a 3.6, even with the pullback. All right, so we locked in a 1 to 2, solid. Maybe you took out partials. Maybe you took out 50% of the position. Maybe you took out 90% of the position. I don't know. Whatever you guys feel comfortable with, that's what you'll do. And then you'll trail the rest. This is only if you're trailing stops. So if you're not putting a take profit, maybe you're good with a 1 to 2 risk to reward. Maybe you're good with a 1 to 3 risk to reward. You're not putting a take profit. And you want to be able to trail for the full duration of the move. This is how we would do it. All right. So far, I think 3 examples. Oh, no, 2 examples. 2 examples with trailing. We still got that 1 to 3. Both of them broke a 1 to 3.5. Right. Let's go back to our previous 2. All right. And I'll show you guys how that will look over here as well. Okay. So obviously we got the drop. Boom. All right. We start trailing at that 1 to 2 mark. So let's get to at least 1 to 2. All right. So 1 to 2 straight drop. No pullbacks yet. So we're still good. We're still in this trade. Everything's looking beautiful. We begin to get a pullback here. Boom. So we got that pullback. What do? Take our trend from the top to where that pullback was, or when it kind of finished. All right. Boom. All right. And we want to see it obviously do what it does, right? All right. So a pullback there. Once it starts to move down again, that's when we would do the trend line. So essentially, it would kind of be the next candle after this pullback. The next candle is where it would have stopped us out. If we were, hopping out based off of our rules, we kind of want to see it close above that candle, right? So whether you would have got out here or you would have got out here, one of these two candles here. Oh no, because this closed below, this closed here, so we wouldn't have been out, and this closed right at it, so you would have had to make a decision of whether you're going to jump out or not. But it would either been this candle here, which is a 1, 2, 3 again. This is a 1 to 3, or it would have been the very next one, which is a little bit past a 1 to 4. All right, but again, bare minimum, you got a solid 1 to 3. All right, just following the trailing stops that I just told you guys. Let's do this last one right here, and then we'll wrap it up. All right, let's find out where that 1 to 2 was at again. So just as if we're trading live in the markets, boom. So 1 to 2 happened right about over here. Boom, got the slight pullback. Again, we don't want to cut through any candles. So the tip of this one is where we would be at or around. So I just want to make sure the markets don't close above that candle there. If we're trailing, okay? If we're trailing, we got a lot of new people hopping on, by the way, guys. So, make sure you guys are dropping where you guys are tuning in from. It's always great to see that. And then make sure you guys give this video a like if you guys are enjoying this strategy so far. Probably one of the simplest, most profitable chart strategies I've learned. It's super simple, straight to the point. Anybody can learn it as long as you're disciplined to trade it, right? So again, markets come down, boom, boom, boom. As long as we don't close above, we're good. We actually ended up closing above over here, locking in a 1 to 2, pretty much a 1 to 2, right? So a little bit above the 1 to 2. But again, you're on the chart, so you're viewing this, you're seeing this yourself. If you chose, you could have just stayed in, wrote it down to the full duration. You could have set a solid 1 to 3. But if you're, kind of like a scalper like I am, and you want to trail those stops instead, so lock in some nice profits and trail the rest, this is how we would have done it right here. Boom. All right. So 3 out of 4 examples, we got a solid 1 to 3, even on the trailing stops, and all of them pretty much broke a 1 to 4 or 1 to 5, or close to a 1 to 5. If you would have rolled the full duration of the trade, I think almost all of them, with the exception of one, had little to no drawdown, right? Which is super lit. And this strategy is really only 3 steps. All right, 4, we're doing the obvious, and the only reason why it's the 4th step is because you don't want to forget it, which is placing your stop loss. Super simple, straight to the point. It's a variation of double tops. Yes, it is a double top formation, but it's not the typical way that you would trade double tops. This is the teacup strategy. All right. And I learned this by one of my guys from the previous academy I was a part of. His name is Lasaldo. Beast, fire with the strategy. I've made a lot of money on it. I know he's making a lot of money on it. And I've been utilizing it in my trading ever since I learned it. Even though I don't solely trade this alone anymore, right? I do very much implement it as a form of confluence, because again, I trade trends. So trading the trend, I'm not getting in at the top of the market anymore. I trade trend breaks and trend bounces, but I do very much utilize this when I am obviously looking at the markets. And if I can identify that teacup, then that is, again, additional confluence for me. All right, it just makes it look great. Makes it look great. All right. Does that make sense to everybody here? Let me know in the chat, guys. Do you guys want to see a variation of a inverted teacup? Or do you guys think you got it? Let me know in the chat if you guys want to see it inverted, which will be a buy instead of a sell. I see multiple examples of inverted here, so super lit. All right. All right, cool. So you guys are voting inverted, right? So let's stay right here in this area. Keep it nice and simple. So inverted is going to be the opposite of the teacup, and we'll breeze through this. I don't like making these lives more than like an hour because it become too long and people don't watch. That messes me up on YouTube, right? So, but if you guys watch it, if you enjoy it, you'll watch the whole thing, right? But yeah, so let's talk about inverted real quick. So inverted is the same thing, but instead of looking for that bull, bear, lower low, what we're looking for is a bearish candle, a bullish candle, and a higher high candle. So we want to see that third candle bullish, all right? Not like a doji or anything like that. We want to see a nice body, bullish, higher high candle. So on the flip side, all right. Now, instead of doing a sell limit, we're going to do a buy limit. So let's go ahead and change this for you guys real quick. All right. And this is going to be a bear, bull, oops, higher, high. All right. Oh, then I got to change this, obviously, to low. I'll just put market low. All right. So we see the market comes down to the bottoms. This is the lows of the market right here in this area, right? Just using this as a quick example, not spending too much time on it, okay? All right, cool. So there's a few places in which we could have actually set this up in this little area here. I'm going to use this one as a good example. All right. It could have done here. If you would have done here, you would have cleared that too, right? Actually, you wouldn't even have entered. So this is actually an example of an invalid one. So look at this. This is perfect. This is what an invalid looks like. Okay. So depending on your broker spread, you probably would never have gotten into this entry here because the markets never came down. Right. But we did get some, equal lows in terms of like the zones area. Right. So in that zone, we did get some equal lows. Right. So instead, what I would have done is I probably would have been looking at this right here. Especially once we got that big, move up. I'd have been like, oh, yeah, this is definitely where it's at. So we got the bear, the bull, higher high. Awesome. We place our horizontal line right here. This is where our buy limit is going to be at. So a buy limit looks like this. The order is placed below the price, and then the price then goes up. Okay? Then the price goes up. So how that looks is, as the markets are coming up and we got our bearish candle, right? We're going to go ahead and place our buy limit on the horizontal line right here. And we want the market to then hit it and come up. All right. We want the market to hit it and then come up. Okay. Boom. All right. Now remember, for a buy limit to happen, all right, the market is going to typically hit it and then bounce off of it or pass it, right? So there could have been a few entry points here, and I'll explain why. So it could have been this one right here that entered or triggered your buy limit in the market. Again, both of these have no drawdown. So let's go ahead and put our stop loss. 250. 25 pips, no drawdown. We don't got to worry about it, right? And as you guys can see, this one moved the full duration. All right. A 1 to 2.5, right? So that was a 1 to 2.5. So if your broker, and this is all depending on your broker, it depends on spreads and that kind of stuff. Okay. If you would have got wicked into this trade right here, you still would have been able to walk away with a 1 to 2 or a 1 to 2.5. All right. Boom. If you missed that and your broker did not wick you in, then you would have definitely got entered into the trade here. Because as you guys can see, the markets actually passed it and then came back in. So you'd have got entered there. All right. Either one, you still would have been good. You still would have made money. There's no drawdown on either trade, so it wouldn't even have mattered. Okay. And even if you got wicked in on the first one here, and markets pulled all the way back, again, there's zero drawdown. So you would have still been in the position even for this second move right here, if you were holding on tight. Okay. So boom, got our inverted upside down cup, and we could have rode that out. You could have rode it out. I mean, that's like a 1 to 7. That's crazy. That's more than a 1 to 7. We're looking at that. All right. You got the pullback. Pull back here. So we exited the trade right around, maybe right around here, which is perfect because as you guys can see, we got nice resistance there anyway, so that would have been a great place to exit, right? But once we broke under that trend line, we would have got out of that trade, and that is a 1 to 5, a little more than a 1 to 5.5. So whether you got in on that or whether you were wicked in on the first one, wouldn't really have mattered because, again, the market did not drop. We didn't hit stop loss or anything like that. So you likely would have still been holding that position. All right. And you would have been good. Does that make sense? You guys got that? Following me? Are you picking up what I'm putting down? Trying to find more. Obviously, this is an uptrending market, so it's a little bit harder to find those bottoms. Oh, that's the one we were just looking at. I guess this is one right here. This is weird, though. This got to be news, right? What is that, 11 a.m.? 10 a.m.? That looks weird. We'll look at it, though. All right. So we come down. We break. Market low. Low lows, low lows, low lows. This is the market low. You guys see here? Bearish, bullish, nice higher high. Market shot up. Okay, cool. Bada bing, bada boom. You know what I'm saying? Boom. Put our horizontal rate. All right. Set our shell. Oops. Nope, going the wrong way there. Going for buys. Again, we definitely didn't hit. Still no stop loss hit on anything that I showed you guys today, which is beautiful. So no stop loss hit. All right. And this is another position that we could have rode. Definitely would have got a 1 to 2. So market goes, comes back up to our price, hits the price here. We enter automatically on the sell. The buy limit, on the buy limit, and then the market shoots up. Okay. Comes there. Yo, back testing this now, man. I'm like, yo, I don't even know why I stopped trading this. I got into binaries and stopped trading this right here, but I'm like, yo, this is pretty fire. I'm a little tempted right now. I'm a little tempted, not gonna lie. I'm a little tempted. This would have been beautiful. Can you imagine like swinging this trade right here? Oh my God. God. That's almost a 1 to 9 risk to reward. Crazy work. All right. And that is inverted example. So you guys see how the inverted works, right? Pretty much the same exact thing, just on the flip side. Got our little espresso cup here. Right? And again, these are more like, these are long-term positions. You know, these are like swings. Like these are like, let's see how long this trade was open. This trade was open for almost a week, 6 days. 6 days. You'd have been floating in profit. 6 days. Boom, boom, boom. Oh my God. Oh my God. Dímelo. Right? And then again, if you're trailing, this is a beautiful position to trail as well. Pull back. We never even came back to the trend line. So yeah, that was nice. Nice trade there. Nice trade there. So all in all, you guys see multiple examples there of this playing out. This not only like absolutely crushing it in profit, but every single example hit at least a 1 to 3 risk to reward. Some of them got as high as a 1 to 5 on a normal basis, and we seeing as high as a 1 to 8, almost a 1 to 9 risk to reward on the inverted style of this strategy. Super lit, straight to the point. It is a 4-step setup. As I told you guys, step number 1 is to do what? Identify the high or the low of the market, right? Depending on which area you're trading. So you want to identify that high or low. Then you want to see this 3-candle formation, the bull, the bear, and the lower low. You're going to go ahead, place your horizontal line going straight across at the body of the candle. Boom. Once you place that body, once you place the horizontal line, you now have the price in which you want the market to come back to. You're going to go ahead to your trading platform. You're going to set a sell limit, okay, for sells. So this will be at the top of the market, sell limit. You're going to then put your parameters of a stop loss, 25 to 30 pips. I usually do 25 pip stop loss, and you are going to set it and forget it. This is by far the easiest and simplest strategy I have not only traded, but the simplest that I've ever taught. Straight to the point, Teacup strategy. Check it out. All right. So with that being said, guys, we're getting ready to wrap it up for tonight. I appreciate all of y'all getting on this live session with me today. If you guys did enjoy, like I said, make sure you go ahead and you thumbs up on the video. If you're not already in our Discord, make sure you go ahead and join the Discord, link down in the description below. And we will be back on Thursday night session, where we are geared more towards binary options trading and my binary options strategy. So if you guys are into binary options or just marking up your charts in general, you're not going to want to miss it Thursday night. This your boy Rico, aka RockStarrFX. I'm out.